Joining us today, right now, to talk about the commodity space and the future of commodities is Jay Martin. He is the host of the Jay Martin Show and the Vancouver Resource Investment Conference, which is one of the largest resource conferences in North America. Jay, I've been following your work. I love your channel. I love your show. Everyone should check it out. You interview a lot of the same people that I do, but obviously with a different perspective. So I encourage everyone to click on the link down below to the Jay Martin Show and follow your stuff. Thanks for being here. Appreciate it.
Dude, it's my pleasure. I'm a fan as well, David. It's always good to see you, man.
Good to see you too. We're both based in Vancouver while you're a little bit further up north. I wish we could do this in person maybe another time, but good to have you remotely regardless. Tell us a little bit about your work right now. Leading up to the Jay Martin Show, I mean, I know you've been involved in the commodity space for quite some time, but before you started your own show, what was your background?
Yeah, certainly. Well, let's do it in person at my conference in January, David, because I know you'll be there. So we'll have the opportunity. Yeah, the Jay Martin Show, that was my 2020 pivot because prior to that, I was all in on live event production. So we produced investment conferences across North America. Our biggest properties were Vancouver, Toronto, San Francisco, and Las Vegas. So when that business got put on pause and it was really unclear how long it was going to be on pause for, essentially I took the part of that business which I loved the most, which was hosting conversations and grilling investors and money managers about where they were allocating capital, really self-serving, so that I could invest more intelligently. And we built the podcast and the YouTube channel just by reaching out to our historic guests, building a platform, all this stuff. And it ended up, to be honest, David, like it ended up being a more fun business. And I love the media business. And so when we got the green light to resurrect the event company, it wasn't an obvious yes. It was like, I don't know if I want to go back to that labor intensive, massive cash outlay, high risk, to be honest with you, high overhead, all this stuff. So when we resurrected the event business, we just did it differently. Instead of doing 11 events per year, I just do one. We throw all of our weight behind that. It's our flagship now, which makes it actually like a really enjoyable company to run again. So we now have the media business, the Jay Martin Show, newsletters, YouTube channels and podcasts, and then the live event we do in January in Vancouver, BC.
And you said that one of the inspirations behind launching your show was to learn from these smart people so that you can become a better investor yourself. Well, tell us how you're investing right now.
Yeah, certainly. I mean, that's it, right? If you can just pick the brains of people who have been in the game, 10, 20 years longer than you have, like take that opportunity all day long. And so right now, like I think it's a pretty exciting market, to be honest, David. I know there's a lot of investors kind of beating their head against the wall and frustrated with the inability to tell which direction the market might go, because there's a lot of sort of conflicting evidence about what might occur. But I make a point of never trying to time the market or predict what's going to occur, especially in the short term. But as a long-term value investor, what I can do is identify when things are cheap and when they're expensive. And that's a game that anybody can play. And that should be the game that every investor plays, is buy things when they become cheap, sell those things when they become expensive. And so, step one for anybody allocating cash right now, I think, and it's a step most people miss, to be honest with you, David, and you tell me what you think, is they forget to ask what kind of investor they are, first and foremost, before you allocate a dollar anywhere, right? Towards equities, towards passive products, whatever. Have you identified how much time you have to invest in being an investor? That'll tell you maybe what kind of investor you should be. And in my opinion, most people should not be picking stocks. I pick stocks, but I do this full time. I do this every day, and so I put the work in, and I know what's required to find winners, and then how to bet accordingly so you can take the losers as well. It happens, but I am in on the commodity sector right now. I think that we're in a secular commodity bull market, and in any secular bull market, you don't see everything run at once. And so counterpoints to that thesis might be like, oh, well, copper's actually falling. Gold had a bit of a burst here, but it looks like it might be flattened out or maybe correcting, or who knows what. The equities are flat. The miners aren't doing anything. There's always evidence that a secular bull market has ended or isn't materializing. And what I would say about that is that in any secular bull market, different things fire at different times, right? Grain had a crazy run. It pulled back and then it ran it again. Lumber, same thing. Oil, same thing. Live cattle futures, like the hottest chart in the world right now. Gold is taking off after a good sort of 24 months of very low activity and super bearish activity. 2020 was crazy hot, right, in the gold market. 2024 might be crazy hot again. Silver will probably slingshot if that occurs, right? Copper will have a run and then it will pull back. But grand trend here over this decade, the reason I'm allocating cash here is just because no one's been allocating cash to the commodity sector for about 15 years. It's remarkably starved of capital. And so we are low on supply of pretty much everything. And that's a problem as we enter whatever this new era of global order is, call it the deglobalization trend, friendshoring, you name it. But definitely what has occurred is that the global alliances that carried us through the last 40 years and increased our access to everything, a wider variety of cheaper and cheaper goods, like that era is over. And countries aren't going to share the way they used to. And when countries don't share the way they used to, things they need become harder to get, therefore scarce, therefore higher in value. And so, those two factors, just to summarize, starvation of capital in the commodity space for the last 15 years, because chucking money at FANG stocks has been a good strategy. You didn't have to look for value, has created this massive supply deficit in almost every hard commodity that we need. And then secondly, now we're in this new era of uncertainty where, countries like Indonesia aren't sure who they're going to sell their nickel to anymore. We're seeing these trends play out and alliances will be more important than they used to be. So, lack of sharing, lack of supply, long-term trend. I'm bullish commodities right now.
I've watched your show. Some of these people I've interviewed myself. They're great interviews that you do. You've got one with Dave Hunter, for example, a couple weeks ago that was released. Here's the title: New Great Depression is on the horizon. Time to prepare is now. David Hunter. I see a lot of these headlines everywhere, not just on our channels, but a lot of people are talking about a coming recession or worse, possibly a depression, if we're not already in one. Don't these headlines just kind of make you want to stay on the sideline? I mean, you do these interviews yourself. You talk to these people to tell you, well, the world is not going to look so good, but you're still allocating your cash. Why don't you sit on cash? Why aren't you persuaded by your guests to stay really defensive and stay out of the markets if things really are looking that bad, Jay?
Because I interview, 2 to 3 people per week, right? And this, right? Like if you interview 10 different money managers who have great track records and have been in the business for multiple decades, you're still going to hear 10 different perspectives. And, you can make a case that all of them have substance to be right, but predicting the future is really, really hard. So 2 things that I try to do here, David. First of all, the doom, the crash, the crisis rhetoric is so seductive. People want it. They want to hear that. And they click on those links. And the crash prediction arguments are always very quantitative. Like you can look at the US right now, for example, and you can point to, deficits or debts or treasury supply imbalances. You can look at the US dollar losing market share globally. You can look at de-dollarization. You can look at global trade and China taking a bigger piece than it used to. And there's lots of data points that would lead you to believe that the United States empire is in its sunset years. So we're heading towards some, cataclysmic crash. And
is that what you believe?
That's not what I believe. No, it's not what I believe at all, and
Okay.
There's a couple of reasons for that. Number one, just in general, I'm anti end of the world narrative, just full stop, right? I'm bullish human ingenuity and progress. If you step back and look at a long enough trend line, we're a very innovative species. We go through definite periods of volatility, uncertainty, war, depressions, but those are usually about 20% of the time, right? And 80% is times of abundance. If you step back and look like the last 600 years, for example, right? We go through some really hard transition periods, but the majority of our journey is like up and to the right, higher quality of living, higher life expectancy, better access to clean water, all these metrics, right? So but I get the doom and gloom. I get why people click on those narratives because they're seductive, they're exciting, and they feel like someone's offering you a solution to a problem that might exist. Getting more granular, we're not we're not going to stop growing. We're not going to stop building. So I'm allocating cash to the commodity sector. And if we hit a serious globally coordinated recession, like David Hunter and many of my guests and your guests say we will, that's not the end of human growth and prosperity. That's what I believe. And so, coming into that, any port of it, we're still going to need, the hard commodities. And if you look at oil demand, for example, over the last 20 years, and you can pick off those events where you would have made the assumption that oil demand really would have fallen off a cliff. Like 2020, for example, we literally shut economies down globally. We parked cruise ships, we parked airplanes, cars in the garage, no one going to work, entire economies full stop. Global oil demand fell by about 8% for the course of 1 year and then bounced right back the following. And that's not much when you shut down the entire world economy. I mean, relative to what you might have expected, a 25% cliff or something like this. In the great financial crisis, 2008, right? The global financial crisis of my lifetime, global oil demand fell by slightly more than 1% that year. So, the whole global recession creates demand destruction at a level that's really going to disrupt markets. It's something to watch for sure. But in general, our appetite is going to keep growing. That's what I think. Because that's what history tells me. Again, I can't predict the future, but I can look at the past and say, well, okay, in these cataclysmic events in the past, what happened to commodity demand? Well, not much, actually, right? Not much at all. We still wanted things. So I imagine we will in the future as well.
Well, you're right. I mean, some commodities are more inelastic in their demand than others. Certainly we've seen cyclical commodities though behave very poorly during the last Great Depression, or not even Great Depression. I mean the Great Recession of 2008. Oil shrank by about 50%. Base metals, they collapsed and then recovered once more. So are there certain commodities, Jay, that you like more than others, given, I guess, your own macro outlook for the next 2 years?
Yeah, it's those that have been starved of cash. So back to, an investor's job is not to time markets. If you can time markets, then you don't need to be watching this show, right? You're already a billionaire. But for the rest of us, we can't do that. What we can do is identify things that are cheap and then sell those things when they become expensive. And so, for example, everybody's asking the question, why aren't mining equities performing? Why aren't gold equities rising as the gold price is hitting new
You've asked
all-time
that
high?
question on your own show as well. So what have people been telling you?
Well, you'll hear 10 different answers from 10 different folks. I mean, I would, there's a couple reasons that you could wrap your mind around. One is that gold's a safe haven asset. So you're buying the physical because you're worried about the future and you don't have much of a risk tolerance. So you buy physical gold because historically that's been a great safe haven. That rises the physical gold price. But to buy gold equities, that takes a really higher risk tolerance. So those two things don't always go part and parcel, right? You actually trend towards the safe haven when you're not feeling super risky. You buy the mining equities when you are. And so, if we're playing defense today and buying physical gold, that's a fear trade. But eventually the gold price will convert to a greed trade and we'll want to get the torque that you get from the equities. When that happens, again, I can't predict it. But I can look at, let's look at gold equities, for example, mid-tier producers, cash flowing companies with great management. You can find a lot of companies. And are they undervalued right now? Well, relative to the past, yeah, they are, and I look at a lot of these companies that were overbought like crazy in 2020. Investors piled in on the back of a hot gold market, expecting that to continue for 2-3 years. And, in 2021, market was a bit flat, maybe cut back 20%, 2022. Now they're down 60%, but nobody wants to sell a loss. So they hold on to the position, expecting the market to come back. And now it's 2023, and a lot of these companies are down 70%. But meanwhile, the investors are like any consumer right now, they're squeezed. We're looking at credit card debts hit all-time highs, new credit card application rejections hit all-time highs, auto loan delinquencies climbing, mortgage delinquencies climbing, and people need cash right now at any cost. And so they'll take that 70% clip to get the remainder of their principal out because they need the money. Well, that's your and my opportunity to walk in and buy these undervalued positions from investors that are severely down and need to get out.
You're in a very unique position because you've worked with so many miners, dozens, if not hundreds of juniors, all the way to seniors. They all want to go on your show and your conference, VRIC, to get exposure, to get investor capital. So I'd like to ask you about investor sentiment in this space right now. What have the people, the miners that you've worked with, told you in regards to sentiment for the space? Are they seeing the same amount of interest, capital flows into their company this year as before, less, more?
Cash is incredibly scarce right now. And so companies are being very conservative, as they should be, with their marketing dollars, with their G&A. I mean, they should be right now. Cash is very scarce. And so you are seeing the right kind of company able to raise cash. Companies like West Red Lake Gold. So, a company that's financed by individuals like Sprott and Frank Justra. So they bought the Pure Gold asset, right? The Madsen mine for pennies on the dollar because Pure Gold went bankrupt because of some horrible mistakes they made trying to put that thing into production. And so there's select companies like Westlake, like Abitibi, who just have the right connections with very affluent investors who are rich enough to be brave when everybody else is running away, and they'll finance companies at great valuations today. But they're very few and far between. The majority of companies right now, David, are starved of capital. And they're running low on options. I mean, as you know, like the junior mining business, the most important resource is not what's in the ground. It's cash. It's access to capital. And right now that's super, super scarce. So again, that's my and your opportunity. If, when the gold market turns, it turns so fast and everybody piles in and people are chasing share prices and FOMO buying and all of this stuff, just like we saw in 2020. But you don't want to be one of those investors in any market. I mean, forget the gold market, pick your market, right? You want to be the one who's allocating capital when nobody cares, when you're walking into a quiet room and you're the only one there, but you have the patience, right, and discipline to park some capital in something that is unloved and then just wait. And that's what long-term value investors should be doing. If you're trying to time the market upswing, that's not my game. I can't help with that. I can't help with that part.
I just, we talked about this just now about why sentiment for the miners is lower right now, but I'm just struggling to wrap my head around the circumstances. Gold is at an all-time high. We're near all-time highs. It actually briefly reached or breached all-time highs 2 weeks ago. The S&P 500 is near its 2023 highs. Bitcoin has rallied. I mean, there's just so much risk on appetite apparent in the markets right now. And like I mentioned, gold is doing super well. I just don't understand why capital is not flowing into the miners right now, despite everything I just said.
Yeah, and
has
I don't know.
anyone told you, like, have any of the miners that you work with told you what they think is going on? Why their investors aren't connecting with them as much as maybe 2 years ago?
Well, I think the answer is that a lot of money entered that sector in 2020, and now it's down. The sector got overbought. Investors were overly enthusiastic. Valuations got way over their skis, and then you see a massive correction. And so investors are logical to be turned off of that industry right now because they're still staring at their losses. And I don't mean to just crap on Pure Gold, but like great example in 2020, this was going to be the next great Canadian gold story, 30 cents up to $3. And then all the way down, right, on the back of some poor management decisions at the Madsen project. That'll burn a lot of investors out. There's a lot of, smart money that was in that deal because the investor base was, again, it was Rick Rule, it was Sprott Asset Management, it was some of the sophisticated dollars. And so retail just piled in, but that was one of hundreds of deals that lost investors tons of cash through 2022. And so there's a hangover from that, right? And it's a high risk business. Like, it should be approached with absolute caution. When people rush in, that's when they get burned. And so I don't know. Where I struggle to answer the question is I don't know if I agree it's a bad market. I guess that's the difference, right? I think it's just the market and it shouldn't be easy to make money in this business. And when it is easy to make money, it's probably time to sell, and that'll come again. Like, we'll see that market again and again. It's cyclical, but I don't see it as a bad market because the junior mining industry, if we step back to like development and exploration, they're just in the business of burning cash, right? They raise capital, put it in the ground, never make a dime. And that's a questionable business model. That's like, it's super high risk. And so Capital should always be a bit scarce and always be a bit conservative. And investors should always be super wary of that industry. For those that are brave enough to roll into it, yeah, you can make 5x, 20x returns if you're smart and you have the durability to weather the ones that lose, and then the patience to wait for the market to come back. But it's not a game that everybody should play, all the time. So, I wouldn't call it a bad market. I think that's the market. And sometimes the market gets crazy hot, and then everyone accepts that as the norm. But that's not the norm. That's the outlier. Like 2020 was an outlier. That's when you get paid. You invest today, you wait for 2020.
Okay. So it wasn't like every single time the gold market reaches a new high, we get an influx of capital and M&A activity. 2022 was an outlier, or 2020 rather. Okay, valid point. But is it true generally that when gold hits a record level or near record levels where it just goes up, we see a flurry of M&A activity, the juniors getting bought out by the seniors? Have you noticed that in the past?
I mean, we see an uptick. I think the expectation of M&A is generally higher than the actual M&A. Like right now, the sector's ripe for acquisition, but it's not ripe to sell. I know a handful of entrepreneurs that are just sitting on decently de-risked projects, and they're being approached by suitors to buy, and they could really use the capital, and their backs are against the wall, but it's the worst time right now for them to sell, and so they're trying to find ways around it. Yeah, when markets heat up and there's more cash flying around, more deals get done in general, absolutely. So, if and I do expect, just for the record, like, I do expect the gold equity market to catch up probably in 2024, just on the heels of a hot gold price. If that rally continues, then eventually greed trickles down to the equities and the investors who are looking for torque, because that's how the cycle works. So I do expect that to occur.
That makes sense. If the price of gold remains elevated and investors have confidence that the commodity is going to remain strong, eventually capital or interest will flow into the equities. That makes sense. So give us your thesis as to why gold will stay strong in 2024.
Well,
again, nobody can predict the future, right? We're all just speculating here, but I'm curious to understand your rationale.
Yeah, so I can tell you why I own physical gold moving into the year.
Okay.
And why I continue to buy. Chaos abounds in every direction that you look right now. And we're coming out of years of economic wars, trade wars, currency wars. Now we're living through a series of hot wars. The global conflict is just continuing to escalate. And I think this decade is maybe going to be the most volatile of my life. Like it might be one of those decades that we look back on in 30 years and 40 years and 60 years and study in the history books, because we're 3 years in. Every single year, this decade's hit us with a haymaker. I don't think it's done with us. I think it's just getting started, to be honest with you. And, to quote Luke Groman, there's very few times in history when you need to own gold. But during those times, it's about the only thing that you want to own. And those moments are when the global chessboard has been shattered and no one knows where the pieces are going to land yet, right? No one knows if the United States will retain its global supremacy. No one knows if the BRICS will stay aligned or if they'll fracture into their own individual ideologies. No one knows if, the Russia war will expand, the Israel-Palestine war will expand, or if the South China Sea, if those tensions will burst and we'll see a third hot war erupt. And because of all that uncertainty, it's not lost on me why over the last, 8 years, but especially in the last 36 months, central banks have been stockpiling physical gold. And the rolling 12-month average again is around 1,000 tons, which is, it's close to like 50-year records here. So why are they stockpiling physical gold? Gold is the asset you own when you don't know what's around the corner. And so it doesn't mean the price is going to skyrocket, but that's not necessarily the job of a safe haven, right? It's where you go when you're not sure what's next. It's the lifeboat you sit in till you find out what the play is, right? It's that option on liquidity. And so, I hold it as that option on liquidity. I can call that option when I need to.
You're absolutely right. There is the economy globally is fraught with uncertainty, but investors can't bank or build a thesis around uncertainty. I mean, gold is one option to hedge, but what is certain for you? If there is one or two certain constants that you can bank on that you think will absolutely remain for the entirety of the decade, that you think will be the most volatile in your lifetime, what would those variables be, Jay?
If I am sitting at the table with you in 2030 and reflecting on the decisions I was really happy with, I think long duration bets in the hard commodity sector are about the most intelligent that I could make right now. And I think that you need to understand that over the course of the next 7 years of this decade, we're going to see crazy volatility in any one of those hard commodities: gold, silver, copper, uranium, you name it, right? Because two things happen in a secular bull market. You have the big macro trends that drive demand over time. But then in between, that start and end, you have traders that get involved and overbuy and oversell and overbuy and oversell, and retail that gets really enthusiastic and overbuys and then oversells and overbuys and oversells. And so along the way, we'll see, massive upticks and corrections. My thesis, because I'm a long-term guy, and I do think about when I'm allocating cash today, I'm not trying to time what's going to happen this quarter. I'm thinking, how can I be really wealthy in the 2030s? And that's the question I ask myself when it comes to my portfolio. Like, how can I be really wealthy in the
I think to maybe sum up your thesis, what you're saying is we don't know if there's going to be a war breaking out in the Middle East or Asia or wherever. We don't know if the dollar is going to devalue significantly. We don't know if the stock market's going to collapse. All these variables, all these scenarios may play out, they may not. All we do know is that regardless of what happens, there will always be demand for hard commodities. Is that more or less your thesis?
correct?
Okay, good. Well, look, you're based in Canada, BC, where I am. What is it about living in Canada that concerns you right now? We'll talk about the risks to not just investors, but also the everyday consumer like you and me. You're a family man, you're also an investor. Is there anything that scares you or bothers you right now? Is it higher interest rates? Is it the unaffordability of the housing market in Vancouver? Is it the stock markets in Canada? Is it commodity prices? Anything about your life that you're, a little concerned about or are eyeing right now with a little bit unease?
Well, politically, Canada's been making headlines over the last 3 years, increasingly. And we don't do that very often. Most of the time, Canada's an afterthought. Globally, no one's talking about Canadian events. And that's shifted over the last couple of years. And you can find any example, pull the recent, Nazi soldier who received a standing ovation in Canadian Parliament, a couple months back. And the headlines that spin out of these events as they occur are often talking about, some kind of conspiracy or narrative or, intentions of the Canadian politicians. I think we just have a really, really incompetent government right now. And that does concern me. I think that the incompetency at a federal level is very dangerous because you've got a little kid with a really big stick. And prime ministers are incredibly powerful. Americans don't always realize this because the American Constitution is brilliant in that it's designed to make the government inefficient. And that was the purpose. It was, how can we limit the power of any one person and therefore retain the power in the people? Prime ministers have a lot more power federally, so they can get a lot more done for better or for worse. I'm very concerned about our federal leadership right now. However, I'm very optimistic about the recent responses we're seeing now from provincial leaders. So for our Americans, we have provinces instead of states, but they function kind of similarly. The provinces are supposed to have a certain level of sovereignty, just as the states are from the federal government. But over the last 6 years, the federal creep into the decision-making of the provinces has increased to the point where provinces, who are the producers of income, and in Canada, we're a commodity-driven economy. We're a supplier of goods to the world. Provinces have been unable to get their product to market because our federal leadership has been essentially putting roadblocks in front of anything we want to export on the back of a narrative that we need to transition towards, renewable power as opposed to fossil fuel, sustainable practice as opposed to mining. But a lot of this doesn't make sense if we get into the details, and we can do that if you want to. But we're now seeing a lot of very intelligent action from the premiers, the leaders of the provinces, like the Alberta Sovereignty Act, the Saskatchewan First Act, similar legislature in Manitoba, which is one more to the east, from the provincial leaders who are putting forward legislation that essentially emancipates them from the decision-making of the federal leadership, putting the sovereignty back in the hands of the people of the provinces. I'll be watching the 2025 election in Canada with more scrutiny than ever before, because if I think about how fortunate I was to have grown up in this country in the 90s, and I feel so lucky, surrounded by opportunity and choice and predictable, safe governance and clean streets and all of it. Like I really am quite blessed. And, you know, my life's benefited tremendously from that. But if I think through, will this country provide that opportunity to my kids who are 3, 5, and 7, 15, 20 years down the road, I don't have that level of confidence. And so as a consequence, you know, we're putting some options in place. We're putting down roots in Indonesia, actually, in Southeast Asia. We're going back there in February, and we're dual citizens. My wife's American, so we're also putting down some potential roots in a couple states that I like a lot. But you know, I think Canada is at a bit of a tipping point here, and in 2025, we may have an election that is sensational, reflective of the 2016 American election. We'll have to wait and see.
You mentioned that you have kids. If you were to leave an inheritance for your kids and you can only pick, I would say, 1 to 3 assets, which assets would they be? Cash is okay. You can say cash if you like, but you know, I'll let you decide. I'll let you answer that question however you like.
Yeah, man, that's a tough one. So, you know, if I have to leave assets, I'm probably going with gold and real estate. Just because it, you know, again, I default to historic trends as long duration as I can look back, and gold and land are the two things that have retained wealth over the rise and fall of you know, empires and countries and market crashes and all of this. And so those are the two that I would point to. But, you know, not to sound super cheesy, you know, what I want to leave my kids with is you know, confidence and creativity. I think those are far more valuable. A creative person who has the confidence to put their creativity into action will survive in any economy, right? And they'll have the tools to build and step forward and do cool things. And no matter which direction the job market goes or where demand for certain skills lies, if you're confident and creative, you're going to figure it out. So
Yeah, let's
that's
talk
what my
about
wife
that.
and I talk about.
Let's talk about that. I mean, I like the way that you're still fundamentally an optimist when it comes to the future of humanity. So if you were to pick another industry or a couple of industries that you think will thrive outside the commodities that we've already talked about extensively, if you were to tell your kids, look, go learn these skills, go learn that, you know, that'll set you up for a thriving career in the 21st century. What industries would those be? What skills would those be?
Man, that's a really tough question because you know, I default to entrepreneurship, David. That's kind of what I get back to, is that, you know, I don't know what you know, what story is going to look like in the future, what narrative is going to look like in the future, you know, what content creation, you know, get into the blue collar, you know, manufacturing and trades. You know, inevitably software will continue to eat the world, you know, and AI is going to accelerate that. And that's not a for better or for worse thing. That's just a fact. Like, we will continue to digitize our economy, obviously, right? Every part of it. So, you know, where the demand lies for human ingenuity in that future, like, is unclear to me, to be honest with you. I think that by the time my 5-year-old is 25, 20 years in the future, I can't predict, you know, where the demand for human ingenuity will be. Which is a lame answer to your question. I get it. But, you know, getting back to, so therefore, what could you arm people with to succeed in that great unknown? And it's like, yeah, it's the ability to think critically. So get back to creativity, to get back to first principles thinking. And then, you know, we build confidence in numerous ways, but the confidence to then put that into action and step forward and try some things.
Let me, yeah. Let me ask you this a different way then. So you're an entrepreneur yourself. You come from a line of entrepreneurs in your family. You work with hundreds of entrepreneurs, right, in the commodity space. What separates an exceptional business leader from an average one?
Could be anything, but what I see most frequently, what resonates with me, is durability first and foremost. So, you know, the game of entrepreneurship is essentially getting beat up 9 days in a row and then having a win on day 10, and then doing that again and again and again or forever. And the bad days will always, or the tough days will always outnumber the good days, but hopefully the good days outweigh the bad days, right? And secondly, I was thinking about this morning. I like that you asked this because I was really frustrated with my team. I had like 6 or 7 meetings in a row where my team was bringing me problems that they were really frustrated with and making into big deals. And I solved them all in about 30 seconds. And that's not because I'm smarter than my team, not at all. Maybe the opposite, actually, because I just simplify things down to their basics. Whereas, we love to overcomplicate and add complexity unnecessarily to the problems we're facing. And so the ability to step back to a first principles basis and just say, how can I reduce this problem to its simplest parts and then attack it from there? And so, yeah, I mean, durability number one, and the ability to simplify would be number two. But durability wins, perseverance wins every time, right? And, Jeff Bezos calls it at bats, right? He makes more mistakes, loses more money than any entrepreneur, but he also makes more because he doesn't waste a minute when he gets knocked down. He just gets right back up. Whereas most of us, we let our failures define us and we sit with them for sometimes years. We think about that thing we tried that didn't work and what that says about us and how we shouldn't try again or what everybody thought about what we did. None of that matters, man. It just doesn't, it slows you down. If you can just impersonalize all that and just step to the next task, step to the next project or gamble or bet, you'll find it for sure.
It's great advice there, right there. Simplifying the problem, breaking it down into components and solving each component one at a time. Before that could be advice applied to personal relationships as well. So many relationships can be salvaged if people were just to do exactly that, simplify the problem, not blow things out of proportion. So I really like that. What is the future of media? I'll end it here. Last question for you. What is the future of media going to look like, Jay?
Well, the near future, I think that, and people will dispute me on this, but I think that there's going to be a huge emphasis put on personal story, because I write a weekly newsletter, for example, and, good following, good response. But let's be honest here, I could just outsource that now to Chat GPT and have a pseudo AI author publish that every week for me, right? So how do content creators compete when movie scripts, when essays, when books, when podcasts, when all this stuff can just be recreated in abundance at a speed that we could never compete with? And I think about, well, people still resonate with personal story and humanity. They still do right now. For example, I read a lot of books. I read a lot of fiction about fictional characters, and I love that. But I also read a lot of biographies. But I've never read a single biography about a fictional character because I want to know about real people and their lives and their history and their upbringing. And when I think about the music and the podcasts and most of the media that I consume, that which resonates with me the most is always that which I can uncover the backstory of the content creator, right? When I know about the author's childhood, when I know about the singer's childhood and their journey, right? From wherever they came from to where they're at. And, there's a sports parallel here that I'll just bring up because, you look at a sport like the UFC, right? It's the fastest growing sport in America for the last 10 years. Like, what do they do that was different from boxing? Because boxing's been around forever. How come a new combat sport was able to come and just completely eat boxing's lunch? And what the UFC did really well was just capture the personal story of every fighter that stepped into the ring. And when you can tell their story to the audience builds an emotional attachment to the outcome because they know who the person is. And right now in media, I think if you're a content creator, you're a writer, you're a podcaster, whatever it is, it's more important than ever, right, to build the personal brand so people know where you came from, who you are, what your values are. You need that emotional buy-in to your journey, or else whatever it is you're creating is just going to be commoditized along with whatever new tech AI can crank out much faster and higher volume and iterate quicker. And so the only way to compete with that is to be human. I mean, that's something AI can't do just yet, right? And so I think there's going to be a massive focus on personal brand building.
Excellent. Well, good luck with your personal brand building. The Jay Martin Show is growing for consistently, so congratulations. Where else can people learn about you and follow your work besides your channel? You mentioned you have a newsletter. What else?
Yeah, I publish a weekly newsletter on Substack. It's the J Martin letter, easy to find. And then we produce a handful of investment courses. Most recently, the Commodity University. So you heard my thesis on commodities. If you want to go deeper, check out thecommodityuniversity.com. It's a 10-chapter video course where myself and a handful of friends like Rick Rule jump into how we dissect the supply and demand dynamics, how we allocate capital, all of this stuff, thecommodityuniversity.com. And then I produce an investment conference every year, and you can find that at cambridgehouse.com. So a couple different URLs, but January 21 and 22 in Vancouver, BC, we'll have about 300 junior mining companies on a trade show floor, around 80 keynote speakers spread over 6 stages. It's 2 days of deep dives into the commodity sector.
Yeah, I'll be there. I'll be moderating a few panels, I believe, and also doing interviews on the floor. So I'm really looking forward to attending. It's one of my favorite conferences for the resource space, honestly. Great turnout always. I love Vancouver, so that helps. Jay, thank you very much for coming on my show. Excellent. Thank you again. Check out the Jay Martin Show. Don't forget, links in the description down below. I'll see you next time in the new year. Happy holidays to you, Jay.
Thanks, David. You too, man.
Thank you for watching. Don't forget to like and subscribe.